Let us now look at the current liability side of Colgate-Palmolive and see what we can interpret from it. The current liabilities is comprised of notes and loans payables, current portion of long-term debt, accounts payables, accrued income taxes, and other accruals. So more or less we have discussed what this current liability structure would be all about. But here we have some items like other accruals and accrued income taxes. Accrued income taxes are those part of taxes which you have to pay within a year's time, and that's why it is showing under the current liability side. Accounts payable are payable to the suppliers, and as we can see, this is actually a sizable portion of the overall current liabilities. Then we have the notes and loans payable, though a very small amount, $54 million as compared to the overall balance sheet size. Let's look at what is there in notes and loans payables. Okay, so when we investigate by finding this word notes and loans payable, we note that the weighted average interest on short-term borrowing of $54 million in 2012 is essentially 1%. So this is the additional information that you got. Okay, let's find if there's some more information on notes and loans payable. Looks like this is what we have about notes and loans payable. Then we also see that there's something called current portion of long-term debt. As we have discussed, this is the principal repayment that is due within 1 year's time. So hence it is classified as current portion. So let us see if we can find some more detail on this. Current portion of long-term debt. As we see in the supplements, we note that the total long-term debt is classified into three types: notes, payables to the bank, and commercial papers, and these are to an extent of $5.176 billion, and out of which the current portion is $250 million. So this is what the bifurcation is all about, and its interest rate is 2.1% for the notes which mature in 2078, and for the commercial paper it is really low, 0.1%. So any other information on current portion of long-term debt? Okay, no matches found. Let us now move forward and look at what is there in the other accruals. So this is actually a very sizable chunk of the current liabilities, $1.88 billion. It's a huge amount. So let's see what exactly is there in other accruals. Other accruals. So we note that there are some derivatives related instruments on the liabilities side which are classified as other accruals. So these are like foreign currency contracts, and these are liabilities, so classified as other accruals. Let us see further if we could find more information. Yes, I guess we have kind of found the relevant information. Other accruals, as we can see, is related to the accrued advertisement and coupon redemption costs. So this is the unpaid element of the advertisement costs, so a very huge amount. Accrued payroll and employee benefits, so Colgate may not have paid the wages or completed its wages in cash, so that's why this amount is coming here. Accrued taxes other than income taxes, that's 48 million. Okay, so within the other accruals, it's funny that we have another item called others, which is a very sizable chunk, $638 million. So maybe we have to investigate this further as well. But probably the information is not so detailed in 10K. Maybe we have to reach out to the management in this case to understand what these other accruals are, because they are classified as current liabilities. So let's see if there is some more information on the other accruals. Looks like that's about it. So when we have to compare between current assets and current liabilities, one thing which is very important to note is that your cash amount here, in this case it is $884 million. This should be sufficient to actually pay out your short-term debt obligation. So here the short-term debt obligation is basically 250 plus 54, so this is 304 million when we add these two up, and we note that the cash and cash equivalent is $884 million. So we note that cash and cash equivalents is much greater than the notes plus debt. So probably the company is in good position, at least from the point of view of 1 year time period.